Think I'm almost there. Okay, there we go. Hello and welcome, everyone. I am happy to be here with you today, and it's Thursday, so happy Thursday, and it's right before Memorial Day weekend. So I'm really excited to be with you today because I get a couple of days off, which is super exciting. Um, but let's jump right into today's discussion. For those who don't know or who are watching this for the first time, I am Shanta Thomas. I have been in the tax industry for almost 20 years, and I specialize in tax advisory services as well as tax resolution services. So I help people resolve their tax debts and also help them reduce their tax liabilities. Thank you so much for joining me today. Before we get started, I just want to encourage you to subscribe to our YouTube channel if you have not already. And I am going to be talking to you. I'm going to be answering a question for you. Hi, Shakari. So today's question I'm going to be answering is one that came to me from someone who just watched online. So they said, last year I had a really great year in business and ended up paying a lot in taxes. This year I wanted to try and get ahead of it. So I've already put money aside for taxes and had enough to put down a down payment towards a property. I heard that purchasing a property can help me reduce and even eliminate my taxes. Is this true? If so, would you recommend that I put money towards a property or go ahead and pay the taxes now? So I would love to hear what you would do in this situation. And I'm going to go through what I would recommend. So let's get started. First things first. One of the first things I would tell you is it's really important to put your money aside to pay your quarterly taxes. So if you are not putting money aside for your quarterly taxes, you could end up with what's called an underpayment penalty. So underpayment penalty is basically even if you pay your taxes at the end of the year. So let's say you're putting money aside this year for 2024 and you're not paying those taxes. Or for those of you who are business owners, you're helping your clients do this and they're not paying the taxes until April 2025 when it's time to pay the return, do the return. And let's say they pay the full amount in April. When that money is due, they pay the full amount. But they could still get an underpayment penalty, which is basically they didn't make their quarterly tax payments all year. So I highly recommend that this person, number one, you still want to make sure that you put your money aside for the taxes. And you want to do that every single quarter. If you have not already paid the taxes, then you're already behind because you already Q1 already closed. Excuse me. Q2 is we're coming up to the Q2 payment. And so you want to make sure that as soon as you can, you make these payments. Now, the only time I would recommend, and yes, there are real ways in which you can vastly reduce your taxes and even eliminate your taxes. But most people don't want to do the work that's required to do that. So the work that's required to do that, eliminate or vastly reduce your taxes, there are some things that you can just do in terms of private placements, which are just different type of financial investment things that will give you tax savings. We do some of those. We also do different types of REITs, and we work with different companies to do real estate investments where you're not the real estate person going out to get the real estate, but you work with other companies that purchase the real estate and do all that. They do cost seg and things. So there are ways that you can reduce taxes. We help our clients do all that kind of stuff. But most people want to be more hands off when it comes to tax planning. I will be honest with you. Even though everyone says I'm going to pay very, very little in taxes, a lot of people are not willing to do the work to reduce their taxes. So if you're not willing to do the work to really reduce your taxes and eliminate the tax, then you need to go ahead and pay them tax bills. And that's the first thing. You need to go ahead and pay your tax bills if you're not willing to do the work. It's a lot of work involved, especially if you're talking about a lot of money. So you would need to, honestly, there are things you can do in terms of purchasing real estate, and doing cost segs, looking at opportunity zones, 1031 exchanges if they already have properties. There are all types of things they can do to reduce their taxes. And so those things don't need to be put in place. They got to be put in place in order to be able to actually get the fruits and the results of that. So there's a lot of work and a lot of people don't want to do the work. Some of the things I also see people do is purchase other businesses. They can purchase other businesses that have a lot of assets. Maybe the owner is retiring. Like, you got a lot of baby boomers that are looking to retire. Well, if you can purchase one of their businesses and they got a lot of assets that they have in the business, and you depreciate all of those things, you could also, and especially if they have a building too, you can also do a cost seg on that stuff and get a huge savings for your clients. For those who are professionals that are watching, or as a business owner, you could do that same thing. Even if you don't have a business, you say, hey, I want to go and buy a business. You could buy a business that has a lot of assets. There's a bunch of things that you want to look at before you do that. But all of that can be done to help you mitigate your taxes, but that takes work, and a lot of people don't want to do that. So the first thing is, I would tell you to, yes, continue to put your money aside for quarterly taxes. The second thing I would say is, what are your goals? What are you trying to do? Do you want to get an Airbnb? Do you want to do a commercial property? Are you trying to purchase a business that's already in existence that has a property attached to it? What is it that you're trying to do, and how is that going to help you reduce your taxes? Have you done any kind of analysis? So these are the questions that I would have for you, because if you haven't done those things to see how it's going to impact your taxes, I definitely wouldn't tell you to not pay the taxes. Because let's say you do these things and it doesn't give you the impact that you want. Well, then what do you do then? Let's say it saves you, I don't know, $50,000 on your taxes, but you thought it would totally wipe out your taxes. So you only maybe paid $50,000 to the IRS and the state for the difference, but then there's $50,000 that you didn't pay in that you think is going to be eliminated by purchasing this property. But then if that doesn't happen, and so as a result, now you still owe this tax, but you don't have the money to pay the tax. I have seen that happen time and time again. So you really need to understand what it is that you're trying to do. And for all those of us who are professionals, if you're a professional that's watching, these are the things you want to help your clients walk through. If this is something they want to do, what does that look like on the return? How is that going to save them money? What type of numbers are we looking at, right? So you want to start looking at those things now and doing analysis with them now. And this is why it's important to work with people all year long, because when we're working with you all year long, we're answering those types of questions to help you understand what you need to do and where you're trying to go. If, as I'm talking about this and you have questions, please also make sure you drop your questions. So the second thing I would then ask you, what are your goals? What is it that you're, again, trying to achieve? How are you going to get there? What analysis have you run? And if you haven't run any analysis, I definitely would not recommend for you to not pay those taxes, because you don't know what the impact is going to be. And one thing a lot of people think is, if I take this money and I purchase a property, that entire bill goes towards deduction on my taxes, and that's not true. That down payment doesn't just go towards your taxes. That total amount, I don't care if you pay 50,000, 150,000, that doesn't all go towards a tax deduction on your taxes. It's actually recognized over time. So if that's being recognized over time and you thought you were going to get all those savings, that can vastly throw off your expectations when it comes to your taxes that have to be paid. So you want to make sure that you're thinking through those things and working through those things, and you want to work through it with a professional. As professionals, you want to make sure that you understand how these things work so that you can put them in place and make sure that they're working for your clients. The next thing I would say is, who are you working with? So this was a question from somebody who's not a professional. So who are you working with to answer this question? I never recommend doing any types of tax savings, tax strategy. It's tax advisory services for a reason. So when you think about tax advisory services, you're being advised by somebody who is very knowledgeable in that space. And so if you're not working with anybody, you could put yourself in a position where you are making decisions about things that you're not fully equipped to make decisions on. But in particular, if you make a lot of money, I definitely wouldn't tell you to take this type of risk without having somebody that you're working with. I always ask my clients, is what you're doing worth the risk of what could occur if this was done incorrectly? So in this particular case, if they don't pay their taxes on time, and then they wait and they purchase this property with the money that they set aside for their taxes. And then it doesn't pan out the way they thought. That could put them in a tax burden position. And it may take years to get out of that position. So is it worth taking that risk to purchase this property? And I would say it's not in most cases. For most people, it's not worth the risk. They don't want to be in a position where they're getting audited or the IRS is after them or asking questions or sending them letters. They don't want to take that risk. So if you're not willing to take that risk, I don't recommend you do any of these things without working with a professional. So my third question to you is, who are you working with? Are these things that you maybe just heard online or heard through social media? If it is, then I would not trust what you hear on social media. It could be a good starting point to give you ideas to some of the things that you could do, but I wouldn't trust it, because those people that you're hearing this from, guess what? They have no obligation to you, which means if the IRS ever came after you, they would be coming after you. You couldn't say, well, I heard this from such and such online, because at the end of the day, your return is your responsibility. So I definitely would not trust somebody that I just heard online make some recommendations about things that I could do. I would want to make sure that I'm working with somebody so I can put these things in place. And it is not a quick, you just heard me say that there has to be analysis and all these other things. It is not a quick thing. So for those of you who are professionals that want to offer these type of services, tax advisory services, who are watching, that's why I say you want to work with clients all year. So you want to put processes in place to make sure that you can work with clients all year long to make sure they're addressing their liabilities, or their anticipated or expected or their estimated taxes that are going to be due. At the same time, for those of you who are not professionals, you want to start working with somebody. You should have started working with someone a few months ago. We work with people from February through February. So even if you came to us now, we started working with people a few months ago. The amount to work with us is still going to be the same. So if you break that up in monthly payments, it actually ends up being more expensive the closer you get to the end of the year, because there's less time. We are still going to have the same close date, which is February next year. We work with all clients from February through February. And we do that for a reason, to make sure they have the numbers that they need to go on their return. So we have a strategic plan that we work with clients on. And you want to have a strategic plan as a client to make sure that whoever you're working with, that you can address what needs to be addressed in time, so that if you're trying to do something like purchase a property, you can find the right property, purchase the property, understand how that's going to impact your return, work on some numbers. And then if there's still some outstanding debt, what else can you do to help mitigate those other tax liabilities that are going to come up on your return? So you really need to have clarity around what it is that you are doing and how you're going to do it. So to answer the question again, for those who came later, the question was that they had a lot of they made a lot of money last year, and then this year they're already expecting to make a lot of money, and so they started putting money aside for their taxes, and they want to take those tax dollars and put it towards a property. So really, I'm answering the question with a question, which you never really want to do. But this is one of those things where it depends. I can't give a solid answer to say you should do this or you should do that. It really does depend on what they're trying to do. So the first thing I said, what are your goals? What is it that you're trying to achieve? Are you trying to do Airbnb, commercial? Like, what is it? How is this going to reduce your taxes? The other thing I said was, who are you working with? Because these type of strategies, in particular, when you're making a lot of money, these types of strategies are and should not be gone into without working with somebody who's helping you with these things. You should be working with a professional. And the number one thing I said is it's important to make sure you pay those quarterly taxes, because you can get an underpayment penalty. So you need to understand that even if you do this, how much of the tax burden will still be outstanding, and you need to make sure you make those payments quarterly. If they already missed the first quarterly payment, I am also recommending they go ahead and make that quarterly payment as soon as possible, and then don't miss the next one. which is coming up very soon here. So it's really important to stop and think through all these things before you make a decision. It's one of those things that it depends, and I can't give you a solid answer without actually working with you directly. So that will be my response. It's probably not the response that you were hoping for. Maybe you want a specific answer. Now, what would I do in a situation like this? So if I had uh, tax dollars that I put aside that I could purchase a property, I think it really, for me, would depend on where I am in business. So there are certain times, like right now, I am super, 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 super busy. I'm in the middle of a move. So doing things that are really strategic and take a lot of brain energy is not in my best interest at this time. So what's best for me is to really take the time to um, do simpler strategies that are going to allow me to get some tax savings, but probably not wipe out all my tax debt, because I don't have the time or bandwidth to really focus on doing that until I hire my own strategist, who can't be myself because I'm so busy working, on my business and in my business to grow my business. So I need to actually have my own strategist. Until I have my own strategist or tax advisor to do these things and work out my analysis for myself, I stick with more simpler things that I know work for me. So things like hiring my children, HRAs, HSAs, retirement plans, things like that. So I stick to those types of things in my business right now, because those are things that I can manage, and I have the bandwidth to be able to manage those things. If I had more bandwidth, or if I had another strategist, I would then look who was doing the work for me. I would then look at possibly purchasing a property, because if I did purchase a property utilizing those taxes, I could then outline, okay, if I purchase this property, this is what it's going to do for me in terms of savings. I would probably do a cost seg depending on it really does depend on the amount of the property, but the property was valuable enough to give me a big enough cost seg that was going to make sense. I would go ahead and do a cost segregation on that property. And I would look at the numbers and see, okay, this is what that's going to mean in terms of my taxes. This is how much it's going to reduce it. These are some other things I can do in addition to that that'll further reduce it, and see where I am. So I would play around with all the things that I could do that would be at my disposal. I would look at all those things so I can start to see how I can reduce my taxes. Now, someone just asked the question, well, what about removing things from your personal name and putting them in a trust or something like that? Well, here's the thing. Here's one of the things that people don't say about trusts. If you put your money in a trust, one of the things that happens with that trust is the taxes is wild over there. I mean, you're paying 30-40% in taxes a year. So that it's much higher. So how we have tax brackets for us as individuals, they also have tax brackets for trusts, but the tax brackets start lower. So after, I can't remember exactly offhand at the moment, but I want to say over 15,000 in sales, it's like 30 something percent. So, I mean, you're going to pay a lot more in a trust. So yes, is it out of your name? Yes, but that trust then has to pay taxes. And I don't know who keeps saying that trusts don't have to pay taxes. If trusts make money, trusts have to pay taxes on that money. So they're still going to have to pay taxes on that money. So that's a good idea for the person who asked the question. That's a great idea. At the end of the day, the trust still has to pay taxes, and they have to pay more taxes, right? It's not under you. So yes, it doesn't flow through to your tax bracket, but for most people, they are not in a 30 something, 40% tax bracket anyway. So they're in a much lower tax bracket. So if you are in a lower tax bracket, you're actually going to end up paying more taxes being in a trust. Is it out of your name? Yes. But my question is, who is going to sue you? Who is coming after you to sue you right now that it would need to be in a trust? That's the first question. The second question is, if it's in order to pass down things and not be in probate, yes, you can put something in what's called a living trust, and you can do that. But then they're just understand you may not pay taxes on it, but then there are all these other expenses that come with that you are going to incur. So you want to make sure that you put money aside for those things if that's what you want to do. So yes, you can put money into a trust. You can put the property into a trust, so it's not under yourself. So yes, you don't have to pay taxes for it personally. But the part most people don't are not saying, they like to leave out, is you do still pay taxes to the trust. The trust still has to pay taxes, and the taxes at that level are much higher. So I wouldn't recommend just putting it in a trust. Again, without guidance, you want to make sure that you're working with the right people, and you want to understand how this affects your bottom line in terms of taxes that you have to pay. Um, but yeah, I would consider doing a property if I had the opportunity to manage it. And I do have real estate properties now, and I have done cost segs on them now, right? So I have all these things. Yes, I do those things. I've done those things. I will probably continue to do those things. But it's important to make sure that you have the time and the bandwidth to really look at what it is that you're trying to do and analyze it to make sure that you're going to get the type of results that you're anticipating, so that it's not a surprise at the end of the year and maybe you don't have the funds. So you want to make sure that you are working through all of that with a professional. I don't see any other questions at the moment. A question just popped up. So the question is, who do I recommend to help clients do these types of things if they're looking to do these? So our firm does help clients with doing these. The thing I tell clients though is, number one, you have to be ready to jump in and do the work, because considering whether or not you should purchase like a property or something is a big decision. And so there are lots of things we have to look at. There's analysis, and that stuff takes time. It's not fast. And so we want to make sure that we have the time to do it. You also want to make sure you have the resources and the funds. For things like this, I typically find clients who are in like the 400,000 and above range. It makes sense for us to kind of do these deep dives. It's not inexpensive. It does cost money to do these things, and a good amount of money to do these things, but it will probably save you, on average, we see it saves most people at least 4 times what it costs to work with us. So if it costs you $10,000 to work with us for the year, you're going to save at least $40,000. That's what we typically see for the year, usually more than that. And that's bottom line tax savings. Usually deductions are higher. You have higher deductions, but I'm talking about bottom line tax savings is 4 times what we charge. But it does take time to put that stuff in place. So we do that. So I would highly recommend that you work with us. You can find us at shantathomas.com. That's SHONTATHOMAS.com. And you can schedule a free appointment to talk through it. But just understand it does take time. And we go from February to February. So we've already started working on our clients for 2024 tax return. So the sooner you can get in, the better you're going to be, because the more that we can do. The later you get in, the less we can do. Some of these things that I discussed today, we wouldn't have time to put those things into place. Follow-up question to that was, how do I know the person is a good tax planner? So that's a very, very good question. So I would, when you reach out to the person, I would ask them some questions. Like, as much as they are seeing if you are a good fit to work with them, you're also seeing if you're a good fit as well. So you want to ask them questions. Have they done this before? Who have they worked with? They probably can't give you names because of, people's rights to their privacy. So yes, no, they're not going to give you names most of the time, but they can sometimes send you reviews. Sometimes people have reviews on their website. We have some reviews on our Google review site. We also share testimonials at different times. We have some on our different web pages. That's one thing that we're working on, is getting more reviews, so you can look at reviews. But you also want to ask them some questions. How long have they been doing this? What are some of the things they've done with clients? What type of strategies do they offer? And then if you have specific things in mind, you want to specifically ask them, have they done those strategies? So if you want to hire your children, you want to ask about that. If you're looking at purchasing a vehicle for your business, you want to ask about that. If you are looking at purchasing real estate, you want to ask about that. Have they done these things personally? Have they helped their clients to do these things? What type of numbers have they helped their clients to save on an annual basis? What does it look like to work with them? How frequently are you meeting? What do those meetings look like? Are they helping you true up your quarterly taxes to make sure that There's no outstanding liabilities that are due quarter over quarter. You want to ask, is the tax return included or is it not included? You want to ask, what happens in a case if, let's say, someone comes in, you start working with them and something happens where you come into a windfall of money or a windfall of expenses. What does that look like? For most firms, at least for our firm, if there's a big change that changes the plan and we have to adjust the plan, we are also going to adjust the price. So you have to be ready for those things, right? And I would ask them, what type of dollars are we looking at, in a scenario like that? Or what type of dollars are you looking at that you might need to spend? Tax planning itself, which is the reduction of your taxes, requires you to spend money to make money. And I'm not talking about spending money on the professional that's working with you. I'm saying it requires you to spend money in the things that you want to do. So in this case, this person wants to purchase property. They are spending money on the property. They may spend money on a cost segregation. They may spend additional money on somebody helping them run the analysis for the planning and the planning itself. They are going to spend money on different things in order to be able to reduce their taxes. For me, I told you I'm doing things like hire my children. I spend money to hire the children. I put payroll in place to hire their children so that I have to pay for the payroll services to be implemented. I have to actually take the money out of my account to pay the children, right? So I have to make sure that money is moving from my account into their accounts. If they're putting their money into an IRA, then I have to make sure that money gets over there. So there are different expenses all along the journey, and you want to make sure that you have the money for that. I put my money in retirement for myself. I'm self-employed, so I have to make sure that retirement money gets set aside. Well, someone is setting it up. Someone is helping me to manage it, right? That costs money. So you want to think about these types of things when you're going into services to make sure that you actually have the funds that are needed to implement these things as well. So you want to ask those questions also. All right, I'm going to end it here. I don't see any more questions, so I'm going to end it here for today. But thank you so much for joining me. If you have not already, make sure that you subscribe to our YouTube channel. And if you have any questions, drop them below. I'll come back and answer those questions. I'll also be back next Thursday, or I should be back next Thursday. I should be back next Thursday to answer more of your questions. All right, you have an amazing day, and I will see you all next week.